After yesterday's decline in Treasury yields, we saw 10-year note Treasury yields rise today, only modestly, but did give us our lowest weekly settle since March 12th. And if you take a step back, over the last 4 weeks, we've seen a range about 158 to 177, roughly 20 basis points. Very reminiscent of the trade we saw for most of 2020, when that's when we saw these 20 basis point ranges hold for weeks, sometimes months at a time, and then they would nudge higher. We've seen the Treasury yields pretty much skyrocket higher since the beginning of this year. So we haven't seen that sustained range like we've seen. Now it's only been a month, but certainly something to keep a close eye on. The Treasury market settles today at 166. That's right around the midpoint of that range. And what does that mean for volatility? Well, if you check out that CVol index over at cmegroup.com, you'll notice that volatility has been rather steady. And as yields have been rising, we see volatility go higher. As yields decline, we see the opposite. And that still holds true here, despite the fact that we saw a steady trade heading into the weekend. Remember, yields and volatility have mirrored each other. Higher the yield goes, volatility tends to go higher, and vice versa. We saw some of that similar today, although with yields settling on their lows, we didn't see much of a decline going into the weekend. We did see yields or volatility settle rather steady today. Lastly, what do we have next week? It is a very busy data week. We have a full slate of data. You have claims, you've got the beige book, you've got retail sales, you've got some manufacturing data. You also have Fed Chair Powell speaking next week, but really the highlight for the Treasury complex is going to be $120 billion in Treasury auctioned 3, 10, and 30-year bonds. Will there be demand for those bonds? Obviously, that's always going to be the big key here as we continue to flood the market with government spending and stimulus. How is it going to get paid for? And as long as we continue to do that, there are going to be more and more auctions coming. So demand for these auctions will be critical. We also get bank earnings next week, and we can talk about how bank earnings are affected by the Treasury market, the spread in yields. Will that allow banks to be making more money as we move forward in first quarter? So certainly some interesting things going on, but a full slate of data as 10-year note Treasury yields hover in the midpoint of the 4-week range at 166.